Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to Merryn Talks Your Money, the personal finance edition of Merryn Talks Money. In these bonus podcasts, we talk about the best strategies for making the most of your money. I'm Merryn Somerset Webb, and this week we are tackling what sounds like a very simple question. If you had $100,000 right now, where would you invest it? Now, we know that at the moment, at least, the majority of our audience are in the UK. So that's, roughly £80,000 if we want to be specific, but it's the same kind of thing. So the point, anyway, is not the currency. The point here is to think about where you would put the money. So what we've done is we've got on Bloomberg personal finance and wealth reporter, Suzanne Woolley, who joins us from New York. Thank you, Suzanne.
My pleasure.
And what you do fairly regularly is you look at particular amounts of money, $10,000, $100,000, $1 million, and you go out and you ask experts what they would do with the money. Is that right? Is that how it works?
That's how it works. I was looking, and this series actually started in 2016, which means I've written a shocking number of these things. But we're trying to get people to tell us where now do they see a compelling sector or a strategy that, and what are the dynamics behind the strategy that make it particularly interesting right now?
Yeah.
And how people can move into that strategy if they want to.
Okay. So your latest one is on $100,000. And can I just ask, before we go into looking at what these money managers said, how do you choose them?
A chunk of them are people that I already know and respect. If we're going to allow this person to share their views, I want to know that they're legitimate, they've been in the market for a while, that they're not completely talking their own game. So a lot of these are people I know. There are people that we speak to at Bloomberg, our markets team, our cross-assets team. So they're people with good experience, but I try to get a broad range. So I don't just get like strategists and chief investment officers. Sometimes I get portfolio managers, or sometimes I'll get somebody who is at a family office. So different little spots in the wealth management world. I try to have a mix of people to get a wide range of views.
Okay. And here's the key question that I know a lot of people are now thinking about, because we've got quite a big professional audience on this podcast, although it is, by the way, aimed at the ordinary investor. I know a lot of pros listen to it. Do you take suggestions? If they all email in going, geez, I can do better than that.
Yes, I do. I'm always open to finding new people. The Where to Invest 10,000, we have the same people pretty much every time, 3 out of 4. But the other ones, the 100,000, the 1 million, my colleague Charlie Wells in London does a great one on where to invest in real estate. I am always looking for new people because I don't want to just present the same people. So there's always a mix of new people, and I'm very open to getting pitches, although, Merryn, I may really regret saying that.
Well, you won't regret it, because what's going to happen is they're going to come into our email.
Excellent.
I'm going to regret it. And they're going to come to us, and I'm going to filter them for you.
That is fabulous.
So then they'll be double filtered by me and you. So hear that, everybody. If you want to do this, you've got to be brave, because I'm filtering you, and then Suzanne is filtering you. So, have something useful to say before you get in touch. On to the people who do have useful things to say and have already got your trust. When I was looking through your most recent article, which, by the way, we'll put the link to that in the show notes for subscribers, what struck me was that there's a lot of home bias here. A lot of the people you talk to are still very heavily invested in the US and in US large cap stocks.
It's really true. I was a bit surprised by some of that. I talked to Sinead Colton Grant, who is with BNY Mellon, and she was very big on U.S. large caps and was saying that people who are concerned about tech valuations are thinking back to the dot-com bubble, but the sector looks different today because of the cash flow that the Mag 7 are throwing off. I guess I had expected a little more valuation concern. I'd had a different take from Sinead's back in late December when we did the Where to Invest 1 Million story, and Jack Ablin, who's the chief investment officer of Crescent Capital, his big picture take was that he thought the S&P was overvalued by 25% and noted that can't be made up by earnings alone. But he also noted something that is very true, obviously, which is that expensive markets can stay expensive. He just was saying he wouldn't have put new money into the Mag 7 because he actually, probably like your guest the other week, Jeremy Grantham, thinks we could see a replay of 2000 and that all we need is some sort of catalyst and we could be down a very unhappy path.
Yeah. But then already, if you decided to stay only in US large cap this year, you're already seeing fairly hefty relative performance, right? I've actually got my Bloomberg up in front of me, and the
Yes.
S&P 500 is at 1.24% as we speak. Euro stocks 13.5%, even the FTSE 100 up nearly 9%, and the DAX up well over 16%. So this year, if you'd stuck with US large cap, so far, I mean, this could turn around any second, we know markets, right? But so far, that home bias isn't looking great for American investors.
It's true. And I personally kind of welcome this to some degree because I'm a big believer in diversification. And one aspect of diversification that hasn't paid off for so long that people have moved away from is diversifying internationally. And I think a lot of people, I talk to some asset managers and their clients want to move away from asset diversification. Their home bias is getting even stronger. And I'm a big believer in international diversification. And that's where the value is now.
And of course, she could still be right. I mean, she says, doesn't she, when you talk to her, that this is the year that AI needs to prove itself. And if it really does prove itself and it is the case, as everyone thought pre-DeepSeek, that the US is the center of the most exciting bits of AI tech, then these valuations that we're so worried about, you and I, may mean nothing.
Yeah, she's not going like rah-rah. She has a smart take on it. You know, she definitely wants to see the results that we're all watching for. In this most recent one, there was someone who did like small caps, which is another sort of interesting one to me because I'm personally a little like leery of small caps. I know that they'll benefit from lower interest rates because most of their debt is floating rate debt. But I just wonder, where do tariffs come in with small caps?
Yeah. But tariffs they're a moving nightmare, aren't they? We're never really we still don't really know very much about what's actually going to happen. So it's difficult to invest anywhere where you might feel there's intense tariff risk.
So true.
And then, of course, we talk about small caps. He only talks about US small caps. And we have a report in the UK out in the last couple of days from Aberdeen suggesting that UK small caps are basically the most unloved, cheapest asset class pretty much globally. No one mentions those.
No. There was somebody in recent times who recommended like 30% in the UK. So there have been, glimmers of diversification.
Okay. And then, so we're moving on to Jerry from Brazilium, who suggested we go abroad for value, right? So that's
Yes.
interesting. And then he also, when he says go abroad, he was talking about not just Europe, but also emerging markets and Asia Pacific. So he's like just anything not US, right?
Yes. I mean, there have been people who've talked a lot about value and looking at areas that have been underappreciated and are obviously, it's not hard to be cheaper than the U.S. market today. Many markets are significantly cheaper. So this is the idea to sort of, he said, think differently, embrace diversification, and look at growth areas and underexplored parts of the market. I don't know if you'd call it Europe, EM, and Asia Pacific completely underexplored, but
not underexplored, but maybe underexplored for mainstream American investors, I guess.
Perhaps.
Yeah. And then I'll just go back to Michael of Levity Financial Group. He was the one who said small cap stocks in the US. But interestingly, he very much recommended actively managed small cap funds over passive. From our side, we always think of the US market as somewhere where everyone always goes passive over active because it's such a huge and well-researched market. And even at small cap level, I thought most people went passive, but he's very clear on active, right?
Yeah, he was very clear on active. He thinks there's more maybe due diligence that sort of needs to be baked into it. There are obviously small cap ETFs that focus on more quality, I believe. But yeah, there was not a focus on international in the small cap space for Michael, that's for sure.
And then the other thing that struck me as interesting from the first three people you spoke to is they all suggested some kind of private part of the portfolio. So even with $100,000, which doesn't seem like that huge a portfolio, they're still suggesting that there's something private. So one suggested 15% between private equity and venture capital, 5% in private credit. And I think, was it Michael also suggested private credit, right?
Yeah, private credit is pretty hot. I mean, this is not meant to be like your 100,000 portfolio at all. It's sort of like if you got 100,000 portfolio today, in addition to what you have, how would you sort of dole it out? But yeah, I mean, there is so much talk, or I don't know if you call it hype, about private market investments. There's this talk about trying to get in the US, trying to get private market investments into our workplace retirement plans, such as our 401ks. It's interesting. We've even seen recently some attempts to launch ETFs, not attempts, they have launched ETFs that focus on private credit. It's a tricky area. They're going to be large, smaller companies, and it's sort of hard to see the vetting that is being done behind the scenes to get into these investments. So I love the idea of having non-correlated assets, but you have to weigh that against the risks, known and unknown, that are in some of these pockets of the market. I don't want to be too negative. I'm just sort of saying that you really have to be cognizant of what you're getting into.
Yeah, and there's also a little argument about the extent to which that non-correlation exists, but that's another podcast altogether. We'll get into that another time.
Yes.
Now, your fourth person, John from Twin Focus, he was very much safety theme, which brings us back to tariffs and the threat of tariffs, which we briefly mentioned earlier. Very hard to see where that's going to go. But if you want to play it safe, he was very much about treasuries, right?
He was very much about treasuries. We were talking when treasuries were, I don't know, around 4.5% the 10-year. They've obviously gone down since then. But at his point when we came out was that you get the treasury, you get the safety, but that also you might be able to get appreciation, which probably has worked out if you bought it right when we put this story out.
And maybe if we asked him again today, right now, he might say something a little different.
I wonder. And he also talked a little bit about gold, which I know you are.
Oh, we like gold. Yeah.
A fan of.
We are. Well, he made me happy in all sorts of ways, because the way he talked about taking profits out of the growth part of his portfolio and moving it towards value and mid caps as a potential reversion to the mean strategy. I'm very big on reversion to the mean, so that really resonated with me. And then, of course, he talks about gold. When he talks about gold, he talks about owning a combination of bullion coins and a gold ETF, so making up about 3 to 5% of the portfolio. I thought that was interesting.
Yeah, that's what they have very ultra high net worth clients. He's with Twin Focus, and that's something that they generally advise for their clients. He basically feels gold has a permanent place in portfolios.
Interestingly, he doesn't seem to think that crypto has a permanent place in portfolios. So, looking through this, I wonder, none of these people mention crypto at all. I wonder if they would with Trump's talk about crypto over the weekend. But have any of the people you've interviewed previously, perhaps the people you've asked when you're looking at $1 million portfolios, have they mentioned crypto?
Yes, they have mentioned crypto. They've mentioned, Bitcoin in particular, since that's sort of where it's at, with the crypto, the ETF focused on crypto, the iShares ETF, taking in so much money this year, although some of it has flowed out recently, obviously. But people have also talked about Bitcoin in terms of a uncorrelated asset, but that's not really true. Because, if you look at Bitcoin and how it responds when the market is risk off, it's not pretty, right?
No. It's not. And we talked about this last week. We did 3 podcasts last week, and in one of them, John and I talked about people who had a lot of Bitcoin and suddenly found they'd lost rather a lot of value very quickly. And at the same time, we were talking about where you might buy a golden visa if you wanted to move to a new country. And one of the things that we ended up talking about was how it'd be a really great idea to move to Greece.
Oh.
And now I look at the final question that you ask all your participants. You say to them, what's their alternative investment idea that isn't necessarily in an asset class at all? And I see that one of them said he's buying a small place in the southern part of Greece.
Yes, he is. John Pantakidis of Twin Focus, who was born in Greece, and he travels back there quite often. Mm-hmm. And he and his wife are buying a place on what they call the Athens Riviera.
Nice.
And he is very bullish on buying real estate in Athens. He was just saying, if you have $100,000, putting that toward a home in some high-end neighborhood in Greece could be a big investment.
When I read that, I slightly misunderstood because I read it very quickly and I thought, wow, you can buy a nice house in Greece for $100,000. And so then I went on to have a quick look on some of the real estate sites and found that when he says put $100,000 towards a home in some high-end neighborhoods in Greece, he means put $100,000 towards a home in a high-end neighborhood in Greece as a 5% deposit.
Yes.
That isn't cheap.
No. He said the prices are skyrocketing and that, it's all foreigners buying.
Yeah.
But he's very bullish.
Yeah. Was that your favorite of the alternates recommended in that article? Because there was some other good stuff too.
Yeah, and this particular one it was. I liked the idea of buying recreational land where you could sort of create your own little compound and you have your hiking trails. And if you're in the US, people love pickleball here. You could put a pickleball court on. But I loved Greece because I love travel.
Yeah.
And I have a secret fantasy of getting some lovely stone home in Tuscany. So I'm always interested in the overseas real estate dreams of some of these people.
I'm just going to ask you one more question, which isn't even about this newsletter, this piece you wrote about these 4 investors. Over the last 6 months or so, has there been someone who's offered you an investment that is outside the mainstream that really resonated with you and thought, yeah, that is interesting, it's different, and if I had $100,000 or $10,000 or $1 million right now, that's what I would buy?
I've had some interesting sort of niche ones, none like the one that your guest the other week, Dan Rasmussen, I think had, which was, Polish stocks.
Yeah, he did.
But I have had someone recommend Korean banks, which I thought was interesting. I'm a boring investor, Merryn. I personally just go for index funds and try to keep it pretty simple. So while I'm intrigued by a lot of these ideas, personally, I keep it pretty simple.
Okay, so you're not coming in with me on a house in Greece?
I didn't say I wouldn't go for real estate in Greece.
Oh, okay, fine. All right. Well, we'll talk about that.
I'll join
offline.
you. I'll join you in sort of like the hard assets. We can go and we can buy some gold.
Yeah.
Some bullion. We can buy some coins.
Yeah, and we can still have pickleball in Greece in the spring and the autumn anyway.
All right.
Now, I don't think that you can buy a Greek house with an ETF, but if you're listening and you click on the link in the show notes, you will find ETF recommendations for pretty much all the things we've talked about today. And you can see how you can get exposure to the asset classes that we are finding interesting. Thanks for listening to this week's Merryn Talks Your Money. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on X or Twitter at MerrynSW and John_Stepek. Suzanne, are you on Twitter? Gotta be.
Yes, I am.
What's your handle?
I am at WealthWatch.
Okay, brilliant. Thank you. This episode was produced by Summer Sadi, production support and sound design by Moses Andam. Questions and comments on this show and all our shows always welcome, as are your pitches to be in Suzanne's articles. Our show email is merrynmoney@bloomberg.net.